Okay, so I'm going to spend a lot of the time, folks, talking about the S&P 500 today and natural gas and TLT, because that's where I think we should focus our time in. They're the trades I see coming up soon. So let me kick off with the S&P. So yesterday I put out a note saying I felt that we might be due for a 5 to a 10% correction, because really it's down to, we'd get into really overbought conditions, a lot of year-end targets, valuation multiples extremely elevated, and then of course all the uncertainty with tariffs and everything else that's going on in the world. I just felt a breather is due. And then when you add into the fact we're coming into September, and whilst I'm not one of these people that say because of a specific month I'm going to trade it a certain way, historically it is the weakest month of the year when it comes to the performance of the S&P 500. It doesn't mean it's going to go down, right? All I'm saying is historically it's the worst month. And the reasoning for this can be attributed to the following. July and August tends to be holiday months really for the US. And the people are coming back off their holidays into September. A lot of funds are then kind of repositioning themselves, and the volumes tend to pick up again. And if the repositioning is on the negative side, it tends to be exacerbated because the trades that might have been put on, for example, in August, where the volumes are actually getting done then in September. So that's the reasoning, or kind of some of the reasoning behind it. Other people say there's nothing to that, but nevertheless, my view is that we might see anything from a 5 to a 10% correction in the S&P 500. So I'm going to focus in on SPY for now, because that's what we're going to be trading when we're putting on our option trades. So I want to show you here what a 5% looks like in terms of where this could go to from the top. So a 5% correction gets you down there to 613, okay? And then a 10% correction gets you down to just 580, okay? 581 there. So we'll just leave that there for now, right? So my view is that we're going to see this probably come down, and then I think it's going to be a great opportunity to buy in the absence of any real negative curveballs that could be coming our way, okay? And I think that the high that was put in recently, which is at 645, will be tested then again by Christmas and probably taken out. So what I'm going to do is actually place the ratio put spread again for September, but there will be a difference on this one. I'm going to do the 610, 600. I'm not going to do it today. I'm waiting for a day where the premiums are going to get up and we can get paid well for doing this trade. And I'll explain what that trade is now in a second. But what I really want to do is this time, I'm actually going to take the assignment. So, you know, the expiry we're going to be using is, I think, September the 19th, somewhere around there. If we get to September the 19th and there's no kind of other bad news out there that we need to be aware of, and our ratio put spread is under pressure and we're going to get assigned, I want to take the assignment there, because the trade that I'm going to put on will get our break even down to 590. And whilst it's not down at the 580 where I think it could go, I'm happy enough there to start building my position on SPY. And if it goes lower, then I can always average in. Because my belief is we're going to see it at 650 then by the end of the year, which is a 10% jump from 590, where our break even is going to be. So I think on the 3 months from October to December, we could be looking at a 10% gain on our investments in the S&P 500. And that's the way I intend to play this. So I want to try and profit a little bit on the way down by buying a put option at the 610 strike, okay? So that's the first part of the trade. Let me draw a little line here just to show you where that is. So we're going to buy a put option at 610. If I wanted to be just bearish on the market, all I do then is probably sell the 600 underneath it. And that would be then a bear put spread. But I don't want to pay for this. So that's the reason why, and I do intend going long. So this time I'm actually going to sell twice as many of the 600 puts. So that's your ratio put spread. So we're buying one put at 610, we're selling to at the 600 put. And what that does is it allows us to profit if the market falls. Okay, so that 610 put starts going up in value. These two down here start coming under pressure then. Okay, and the naked one, the one that's extra of the ratio here, that's the one that's actually going to get us assigned on the S&P 500. That's the one, if SPY drops below 600 at expiry, we're going to end up buying 100 shares of the S&P 500. So the trade right now, if I was just to log in here and place it now, the premiums aren't good enough to put it on now. And because I think the market's going to fall a bit, I'm going to wait here. And I'm going to just be patient. So I'll just show you what it looks like now if we put it on right now. And always remember, when you're putting these on, guys, I would much rather you did it the way I'm doing it now. So let's say you were doing 5 contracts of this. I'd still want you to put the ratio of 1:2 here. Some people put in a ratio of 5:10. Whilst there's nothing wrong with that, I'd much rather you did it this way, where you did 1:2, then clicked on order, and then change your quantity in the next screen. Some people make mistakes here. They put 5:10 here, and then they go into order, and then they put in another 5 there, and all of a sudden they've got 50 contracts on, you know. So I'd much rather you just get into that protocol here of changing the ratio on this screen here. Okay, so we're buying one of the 610s, selling 2 of the 600s. You can see here at the minute, we're only getting in $117 premium at this minute in time. If I'm correct and SPY drops to 520 or 620, for example, that could be like $300, you know. So I think we're going to get more premium by just being waiting. I could be wrong, and it's impossible to time this, by the way, but I'm certainly not going to do it now for the sake of $100 a contract. I'm going to be patient and wait. You can see down here that my break even here is 588.86 if I place the trade now. Now, if I wait and be patient, and let's say I do get $3 a contract in for this trade, that break even will actually be down at 587. So that's another reason for waiting. And you can see the probability of profit on this trade will be 99%. So this trade is the trade I'm lining up now. I'm not ready to place it today. Unless the market fell 2% or something today, then that's a different story, right? It doesn't look like it will. Pre-market, it's showing it's down maybe 1/3%. So this might gradually go down, but I think 620, 625 is going to be my trigger to jump in, put this ratio put spread on. But I want you to be aware, and I just want to be clear on this. This time around, unless there's some information that comes out of the blue that scares me, I will take the assignment and just hold this right into the Christmas period. So my hope is that we get the assignment, okay? So that's the plan with SPY. That's my thought process on SPY. The only thing that's going to change that is really bad economic data out of the US, or something, Trump throws another curveball at the markets out of nowhere, okay? So is there any questions on that? Is there anyone that doesn't understand what I'm talking about here? No, we're all good on that? Okay, so that's the strategy with SPY. I think that, by the way, see the low that was put in yesterday, always be careful of those candles here. So each one of these is called a candle. And this represents a full day of trading, the way I've got it set up anyway. And the bottom wick is the low of the day, and obviously the top is the high of the day. So when you see something with a long wick, is what they call it, just be careful of it. It usually means we'll come back and retest this area at some stage. So let me go back over time and show you. There was one there, a long wick, right? Now, it took about 2 weeks, but eventually we came down and retested that low there. So there's something to that, okay? So I think we retest this low very, very soon, actually, to be honest with you. And I do think we're going to get down probably to the 600 level at some stage between now and the end of September. That's what I'm hoping, at least. If we don't, we might have to buy SPY at a higher price. We'll see when we get to September. But right now, for an option trade, I certainly don't want to buy SPY right now. I don't want to short it either, because, you know, the market has been totally irrational for a long period of time, and it could just start shooting up on me. So I don't want to start paying for short trades. I'd rather do it via the ratio put spread. Okay. Okay, well, if you've no questions on that, what you need to watch out for there, and the reason just on option pricing, and again, just getting you used to this, you see the VIX here, it's at 16. That's really low by historical standards. It's even though it went up yesterday by 5%, we will get paid more for this trade when the VIX gets above 20. And that's what I'm waiting for now. Sometimes when you don't have that luxury, but because I feel very strong that the market's going to pull back, I think you're better off waiting. That VIX starts spiking, that's the time to place the trade. And finally, I just want to give people another alternative. People who don't want to do the ratio put spread. The reason I do the ratio put spread, by the way, is it lets me profit more on the way down. But let's say you're not as confident that it's going to drop down and you want to take in more premium up front. Then you will just sell a put option at the 600 strike or somewhere around there. You will take in more premium, but the downside then is you're not going to profit really on the way down if SPY does fall. You won't have any long puts there to profit from. Okay, so I think it's just something to bear in mind. Again, any questions on that, just reach out to me and I'll talk you through it in greater detail. I suppose the next one that we've been trading regularly is TLT, and we've traded it twice, basically 2 weeks, and we've made 1% in a day each time, roughly 1%. And I'm a little bit more hesitant trading TLT this week. And the only reason for that, guys, is this. We've got this Jackson Hole event on, so you've got all the Federal Reserve governors, plus well-known economists, business leaders, all meeting in Jackson Hole, and they're going to come out and make a statement about what they see for the economy and all going forward. And that can be a mover for interest rates and the US dollar and a lot of different things. So that's the only reason why I was kind of holding off. Plus, we kept making these lower lows. And as we make these lower lows, it kind of just, you want to see that trend really end or come down to a classic support area. So I'm really, I suppose, trying to maximize the trade this time, hoping this gets to 85 and then being able to put on that short put for European investors. So just let me be clear. People outside of Europe don't need to worry about selling puts on this. You can buy TLT outright. It's just for people within Europe. It's because of some of the EU financial regulations on exchange traded funds out of America. For whatever reason, there's a Europe is known for red tape. It's another red tape thing, and interactive brokers take it very seriously, and they're not prepared to let people trade it for whatever reason. So the way you trade it is sell a put option in the money if you want to get assigned. But people outside of Europe, you can go ahead and buy it outright. Okay. What I'd say to people who already own it, just hold it. You're getting paid nice dividends. I eventually see this, by the way, being up at 92, 94, way up here over time. So when we get a position in this, I'd be inclined to hold it for the long term. Because what I do think is, if you look at what's happening, I think Trump is going to have 4 governors on the Federal Reserve Board between now and the end of the year. And then if you think he's going to have a replacement for Powell, that's going to be 5. I think eventually he's going to get his way on interest rate cuts, and that's going to be very good for TLT. Okay. But short term, the inflation data could be a bit wacky with all the tariffs. So that's why I'm kind of just holding off a little bit, just waiting for this event to pass, and then probably next week we start selling puts on this again. So you can see today it's down 0.5% again. That's going to bring it down probably to here, just slightly below here, you can see. And we'll see, does this low get a retest? So I'll probably wait till Monday before I place a trade on that, but it might be tomorrow. But TLT is certainly something I want to sell in the money puts on. If it gets down to 85, for people outside of Europe, I would just average in, buy more of it. You could even buy more of it now if you wanted, and then wait it again, if it dropped again, just keep averaging in all the way. But if you're buying this anywhere between 85 and 87, I think you're going to make 5 or 6% over the next 3 to 6 months on this particular instrument, you know, right up to 92, 94. But, you know, pinpointing when this is going to start moving is going to be quite difficult. And the reason I do like it is you're getting paid a 4% dividend for owning it. So even if it doesn't move and you're in the meantime, look, you're getting paid 3.8% here, 3.85. So it's worth holding for that alone. Okay. And that's the reason why I like this particular instrument. I like it where it is now. I'm just trying to bottom fish here. That's all I'm trying to do. But I think this is going to trend up to 92, 94. You never know. That might happen by Christmas time. And that'll be another 5 or 6% in another instrument for you. Okay. Any questions on TLT?
No, I just show the hand of inexperience there on the two trades on SPY and TLT. I did the 87.50 puts on TLT, got assigned, took in 95.
Yeah, lovely.
Rolled up the 600 SPY up to 620, expiry on the 19th.
Yeah.
Just to show the hand of experience against you, what you have just gone through.
Yeah, and how'd you get on in the 620 with SPY? That's expiring tomorrow, is it?
No,
September.
They were both. The 600 was September the 19th, and I rolled it up to 620 and took in an extra 225, I think.
Okay.
Yeah. So that would be a break even, I think, about maybe 215, 216.
Okay, so you probably need to keep an eye on that one, Michael. You might need to roll that back down again.
Yeah.
At some stage, the challenge you're going to have there, and it's a great learning experience, is I'm just basing it off my mindset. So I'm just going to talk about me here. If I was in your position, I'd be going, I actually want to have this at the end of September. So rolling it out to October down to a lower strike probably isn't going to cut it for me, because I actually want the assignment if we do get a bit of a shakeout in the market, you know. So your thing will be, you know, if you rolled it up from 600 to 620, you obviously made something there.
Yeah.
You might want to think about rolling it back down, you know, closer to the 600 mark at some stage, you know?
Yeah.
Yeah. Just think about that. Now, you're no pressure at this minute in time, by the way. But the closer that keeps getting to 620, the more expensive that's going to be for you to roll it down. Do you get what I mean?
Yeah.
So just be aware of that. Okay, and the other thing I wanted to talk about, guys, is natural gas. So our decision to hang off has been very good on natural gas. So we're looking at the futures contract, and we're also looking at the continuous futures contract. And I just want to explain what that is. This is like, you know, every month you have an expiry on natural gas futures. And when you control, let's say, lob into the next month, usually you get an artificial bump or an artificial fall, depending on what the outlook for natural gas is. Usually it's up coming into the winter period because people are expecting greater demand. So sometimes you get, for example, let me go back here. There's when the contract switched over. You can see this day, natural gas prices jumped up. So you might have thought that was a real big day for natural gas, but actually it was just a switch over from the back month to the next month in the futures contract. So even with the continuous contract here, you can see that we're still creating lower lows. So our decision to wait and be patient here is proven dividends at this moment in time. My trigger point is still 250 on this. If we got to 250 and our RSI was below 30 and crossed back above it, I'd probably start taking my chances then. What I want to really highlight and explain to you here is this. Natural gas is extremely volatile. Yesterday, it didn't do anything. The day before that, I think there was like an 8% move in it in total. So this goes up rapidly. So when you start buying this thing, expect to see big up days and big down days. And if you don't like that, you stay away from this instrument. I just want to make that clear. But if it gets to 250, my strategy is going to be quite simple on this. I'm going to buy the futures. But I've been around long enough to know, and especially with natural gas, that it could actually fall below 2 as well. So my strategy then will be to average in if it does do that, and then roughly getting my average price to around 225. Okay. And I kind of know at 225, it doesn't really make sense for producers to actually continue producing massive volumes of natural gas. They're not making a lot of money out of it. So you would expect to see wells being shut down until the price starts to stabilize and go back up again. And that will be my rationale there, that actually I think that, you know, averaging in a 225 gives me a great chance of getting out at 3 at some stage, which is quite a significant return on investment. But it's not for the faint-hearted. You could be looking at this down 10, 20, 50%. And that's, I'm just being straight up with you. It's not like SPY, where SPY goes, you know, plus or minus 5% a month. You know, natural gas could go plus or minus 20% a month. I mean, that move from there, 4 in June, down to here, you know what, 2 months later, like that's a, you know, a 33% plus 40% move. It's huge, like, you know, and that's what you got to be aware of with this. And what I like is that we're on the right side of it. For those who do like a bit of a punt on this, I'm getting in at 250. That's my plan. If it doesn't fall to 250, so be it. And I do expect it to jump up. We'll be coming, the expiry in this contract is the 27th. So it's next Wednesday. I expect it to artificially jump up again. So if you ever want to see what this contract looks like, it gives you a better idea. Look at the lows. This is, you know, this is the actual September contract that's expiring in August. I know it's weird. It expires in August, right? But you can see here that the low was taken out quite significantly on this, you know. So you can see what this trend, it's seriously down. So that's another reason why I'm not ready to trade it just yet. If I go back to the continuous contract, I'd probably look at this contract here, buying something like this one, maybe the October one, which gives me more time for this to work itself out, if that makes sense. So you can see the October one here is up at 320. You can see the price of it. It's much higher. You know, so you just got to be aware of this, you know, what we're doing here. I think it's really important to understand that. So we switch over to this contract here. You'll be trading the October contract, which expires in September. You can see here, you know, the price it is at 287. It's much higher than the continuous contract. So I'll probably trade the next month out. I will buy it when this continuous futures contract probably gets to around 250. Okay, just to be aware of that. I hope that makes sense, everybody. There is another way of trading this, guys. It's through UNG. It's probably less risky and gives you more time for stuff to work out. Having said that, the correlation in pricing, it's not the same as the continuous contract. I just want you to be aware of that. So if, for example, you buy today, UNG this is an ETF that tracks natural gas prices, right? But it does it over a number of contracts into the future. If, for example, the continuous futures contract jumps 10% today, this might only jump 4%. So it doesn't track it perfectly at all. But it is another way of getting exposure to natural gas. And you can see it as a longer term thing. I'll stay in it for as long as I can. And, you know, the last time we were looking at this was down here. We felt it was going to go back up to 30. It actually went up to 24. I think we got out at 20 on it or something like that. We didn't even wait for 30. But it just goes to show you, you know, natural gas moved a lot more aggressively in that period of time. Any questions on that? No. So just looking at bond yields here, this is because it links in with TLT. Bond yields pretty much, I think this goes sideways, right, for the next month or so until we actually see a Federal Reserve indicate clearly we're going to cut rates. And then I think we drop below 4%. And when that happens, I think TLT will be at 92, 93. So just keep an eye on your 10-year bond there. Kingspan, another good decision here to wait. You can see it's testing these lows again here, so I'm not ready to buy this yet. You could do if you wanted, guys. If you wanted to buy it, average in. Remember, when you're buying stocks, we're not in this like SPY for maybe a couple of months. We're in it for a couple of years, you know. So just because you buy it today doesn't mean it's going to go up tomorrow. You just got to remember, stock investing is different. So Kingspan is a longer term play. So if you bought a bit today, there's no harm in that. And we could always average in if it drops further. But just be aware, it remains in this downtrend and it's retesting a support level here at the moment. So there's a chance that this might slip down to 65 euro. So if I was buying into Kingspan, I wouldn't advise against it. What I would say is don't buy all your position now. Maybe go half and half. Okay. Veolia is the similar situation. I think you need to see that back down here. And then Alaska Airlines is starting to pull back a bit. So I definitely want to see that in the low 50s before I consider buying Alaska Airlines. We spoke about Icon. I was too pernickety on this one. I waited too long. It's after moving up too far for us now. So I think we need to see it back at 160 before we invest again. But I do think once it gets to 160, guys, I think you should consider going into that one as well. So I'll finish off just looking at currencies, and then if you have any questions, just fire away. You can see little movement here. Can you see this in the euro dollar at the minute? It's kind of just waiting to see what's going to come out of the Jackson Hole event, you know. So the currencies are telling you things are starting to quieten down a little bit here. Where this could go is anybody's guess. You know, there's a school of thought here. I was listening to a JP Morgan strategist earlier on, and she was saying that she feels that the divestiture away from US assets because of Donald Trump is not over yet, in her opinion. And that's going to have a weakening impact on the dollar if that happens. So she's saying that because of the lack of clarity, people are going to remove their money out of the US equities and things like that. That's her view. I'm not saying she's right, but and that will lead to a weaker dollar again. So just be aware of that. That's a school of thought that's out there. Okay. And the British pound, US dollar is something similar. Okay. Any questions, folks?
When is the next dividend paid on TLT?
It's a great question. They don't have it outlined there. Normally they'd have it here, but it's usually, if you look at these dates here, Michael, the 1st of July, that was the 1st of August, 2nd of June, 1st of May. So you'd expect the X date is going to be the 1st of September, 2nd of September. And if you look at the payout dates, by the way, they're 3 days later, 3 to 5 days later. So you'll have it in your trading account, probably within 5 days as cash then, you know. And don't forget the US government take their cut of tax out of it at source. So just be aware of that. Okay, folks, just before I finish up, you can see the futures are kind of getting worse there. The S&P is down about 0.4% here now in pre-market. We'll see what way it goes. I think we're at least going to get a retest of 620. And it's probably at this point here, I'll put that ratio put spread on, but I'll give you plenty of heads up on it. And TLT, I'm leaning really towards early next week before I do it on this one. I just want to see where it goes. And natural gas I've explained as well. So look, you know where I am if you have any questions. And have a great day, and we'll chat again soon.
Thanks, Stephen.
Okay, guys.
Thanks. Take care. Okay.
Cheers. Bye now. Bye-bye. Bye.